Welcome back, day traders. And in today's video, I'm going to give you one concept related to volume that will completely change your trading and save you hundreds, thousands of dollars in the market. So everyone should be utilizing volume in your strategy because it ultimately tells us, is there activity and is this a good position to take based on that activity? However, if you're searching bar by bar and comparing that one individual bar, and that's the only type of volume analysis that you're using, you're making a monumental mistake and it's going to cost you absolute thousands. So in this video, we're going to talk about volume preceding price action. I'm going to give you a live example and a couple of tips on how to use that. Let's head to the charts. So this video was really, it came from a student conversation that I had today. And the frustration was, overall I looked at good volume and then it went against me. And then ultimately it ended up going in the direction that I wanted. And the key to this is understanding that volume is going to precede price action, especially when you're trending like we were in this example today. So what we had here was we had a major supply area or resistance area, so to speak, that had formed earlier in the day. And the student was utilizing this area right. He saw this kind of coming. And then here's the thing, it broke through on very good above average volume, which is a positive sign. We want to see that if we're trying to break a structure. So the effort matched the result here, right? And as it got above, he waited up until this point until volume he thought started to come in again, which was honestly a bit of a mistake because we see volume already here. There's already the support there. So a couple of things that I noticed in this example was, number one, we had the volume, the break of structure. And what we want to see is we want to see price kind of break out of that area. We don't want to take the initial breakout. We want to wait and see what happens if price tries to come back into this area. And what happened was, this is where volume, utilizing volume on an individual basis can come into handy. So we know that price has kind of lifted to this point and there's solid volume. And then now it starts to retrace back to the top of that level. Well, look at this volume that corresponds with this move down. Okay, we start to see lowering volume, which is a strong signal that this is going to continue to the upside, which is exactly what it did. So now, how do we use this information to make us a smarter day trader and investor? Here's a couple of key tips to take away from this video. Number one, watch for volume spikes and consolidation. So when does volume go above average? And if you notice on my chart, I had an average volume line that's there. And all that's doing is helping me to see when there's spikes and above average volume, okay? So when a stock has been moving sideways, especially in consolidation, and you see a big spike in volume, that can be a sign that a trend is about to break and you need to get ready to watch for either direction. Number two, compare volume on breakouts. So on a price breakout, there has to be a strong effort. There has to be strong volume, obviously, to break that structure. So a true breakout needs to be accompanied by strong volume. So weak volume during a breakout might indicate a false breakout, meaning that price could quickly reverse. So as you're watching the chart, volume should be increasing as it's going into that zone, as well as the price action should match that. That's going to help you to understand whether once it breaks above or below, can I go long or short with it? Number three, watch those individual volume bars still because they can give you some divergence hints. So meaning that once price breaks above, let's say it breaks above a major supply, which is a resistance area on the chart, and it's had strong volume, and now we get a couple of red candles that come back down into that zone. If the volume starts decreasing as those red candles are coming down, we don't have to worry about those red candles because nobody's actively selling and a continuation is likely on the way. So we want to watch those individual bars, but we definitely want to use preceding volume to tell us where price action or what price action is likely to do. So with all that being said, volume in all is a game changer for your trading, but you can't just look at one individual volume bar. You have to take the whole picture into consideration. and understand that volume is going to precede price action, and you can utilize that to make you a much more profitable trader. Implement it today and you're not going to be sorry. If you found this video helpful, smash that like button and subscribe for more trading insights. And as always, drop those questions below or comments below. Until next time, happy trading and keep your eyes on that volume.